Welcome back to Investing Talk podcast.
Good to be here.
Today we're taking a closer look at Surf Air Mobility.
SRFM, that's the one.
And you sent in a whole collection of information about them. Our goal today is, well, to figure out what it all really means.
Get past the surface level. Find the essential insights for you.
We've got their company profile.
A due diligence report from earlier this year, and also a newer update, May 13th, 2025.
So that gives us a pretty multi-layered view, doesn't it?
It does, from their basic business model to recent financials and, their future prospects.
And our aim is to just synthesize all this for you, our listener. Highlight the key takeaways, the interesting bits.
So you can get the essentials quickly, thoroughly, without feeling, buried in data.
Okay, let's start unpacking this then. What jumps out at you initially?
Well, the company's foundation, I think. Founded back in 2011, based in Hawthorne, California.
Right.
Operating in that air mobility sector.
Yeah.
Key things they do: schedule commercial flights and also on-demand charters.
But it sounds like there's more to it than just being a typical airline.
Oh, absolutely. That's a really key point. They're actively developing an AI-powered software platform.
Okay, software.
And, very importantly, working on electrifying aircraft, specifically the Cessna Caravan, using their own powertrain technology.
Ah, so their own tech. That's interesting.
It is. This dual focus, software and hardware innovation, that seems core to their story.
It's also pretty notable that while they're doing all this future-focused stuff, they're already quite big in the present, aren't they?
They really are. Turns out they're one of the largest commuter airlines in the U.S. if you just count scheduled departures.
So they have an existing market presence and operational base.
Exactly, which is a solid foundation to build on as they innovate.
Okay, so let's pivot a bit to the financials. There seem to have been some recent developments there.
Yes, indeed. They closed a $5 million funding round just back in April 2025.
Suggests they still need capital, perhaps?
It does suggest ongoing capital needs, yeah, and efforts to keep that funding coming in. Also, Q1 2025 results were just announced May 13th.
And what were the expectations for that quarter?
Analysts were looking for around $24.3 million in revenue and an earnings loss, roughly $1.10 per share.
And how does that compare to, say, the end of last year, Q4 2024?
Well, Q4 24 revenue was $28.05 million,
Okay.
which was actually up about 5% from the $26.8 million the year before. So, some growth there.
Really good as a catch.
Well, the bigger picture context is this. The revenue estimates for the full year 2025, they've been revised down significantly.
How significant?
From about $177 million down to $104.23 million.
Wow. Okay, that's quite a drop.
It's a huge adjustment. Really crucial to understand why that might be.
It really makes you wonder, doesn't it? Is it the tech side taking focus, or maybe just headwinds in the commuter market itself?
Could be either, or both. It's a big reassessment of their near-term potential, for sure.
But wasn't there some better news on the earnings front just before that, in Q4?
Ah, yes. The previous quarter, which we assume is Q4 24 based on the timing,
Right.
their earnings per share, EPS, actually beat expectations. Came in at positive $0.60 versus an expected loss of $1.19.
So more profitable than expected in Q4.
A positive surprise, yes, which really contrasts with that expected loss for Q1 2025 we just mentioned.
That's quite a swing. Any idea what drove that profitability beat in Q4?
The sources don't specify exactly, but it's a notable point against the more recent figures and forecasts.
Okay, so we have this mix. Innovation, an established business, but also these financial, let's say, complexities and that big downward revenue revision. What are their core strengths?
I'd say a major one is definitely the innovation in electrification and that AI software.
Positioning them in potentially high-growth areas?
Potentially, yes. Sustainable aviation is a hot topic, and having that existing commuter airline operation gives them, a base and market access.
Then the proprietary powertrain.
That could be a huge differentiator, developing their own tech for the Cessna Caravan.
Yeah.
That's ambitious.
It sounds like it. Not just buying off-the-shelf parts.
Exactly. Could mean better performance, maybe efficiency, but also adds, significant development risk.
Makes sense. Anything else on the strength side?
There seems to be some, let's call it cautious optimism in social sentiment, online chatter about their tech roadmap.
Interesting. Even with the lower revenue forecasts.
Yeah, which is curious. Maybe a disconnect, or maybe just long-term belief despite near-term hurdles.
Okay, that covers the potential upsides. What about the challenges? the risks?
There are definitely several key ones. Stock performance could be volatile. That's pretty common for recent IPOs, and especially in a competitive industry like this.
Sure.
Then there are aviation regulations. Big potential risk there, especially around electrification.
Changes could impact timelines, costs?
Absolutely. Development timelines, costs, the whole certification process. And that downward revision for 2025 revenue we keep mentioning.
Raises near-term growth concerns.
It does. Valid concerns.
And financially, you mentioned the need for capital raises earlier. Are they operating at a loss?
Seems so. Ongoing operating losses, like they reported a loss of 94 cents per share back in Q3 of fiscal 24. That puts pressure on stability.
Hence the funding rounds.
Precisely. And their market cap is quite small, a micro cap, around $52.88 million.
Meaning?
Well, for listeners, a micro cap is a smaller public company. Often higher growth potential, maybe, but also higher risk, more potential for big price swings compared to larger firms.
And competition.
Oh, yeah. The electric aircraft tech space is getting crowded. Lots of players trying to innovate.
Okay, let's zoom out a bit. What's the broader market feeling, the context around Surf Air Mobility?
Well, recent news coverage does tend to highlight their innovative approach. That could attract investors keen on sustainable solutions.
Makes sense.
There's also been noted insider trading activity, some hedge fund interest mentioned just before those Q1 earnings came out.
Suggesting some institutional eyes were on them.
It suggests some activity, yes. And connecting it to the bigger picture, that whole regional air mobility sector is changing fast.
With a focus on
Electrification and AI, which lines up perfectly with Surf Air's strategy. Plus, there's just broader demand growing for sustainable commuter travel. That's a positive trend for the industry overall.
So pulling all this together, what are the really crucial questions we should be asking about Surf Air Mobility's future?
I think a key one is, how are they going to manage that gap between the exciting tech vision and the current financial performance?
Especially with that revised revenue outlook.
Exactly. And what are the specific timelines, the milestones for their electrification work, for the AI platform? We need more clarity there.
And navigating the regulations for electric planes.
That's another huge uncertainty. How will they handle that? It's complex.
So what should people watch for going forward?
Definitely upcoming earnings reports, any updates on the product launches, hitting those milestones, those will be critical signals.
And keep an eye on the fundamentals, too.
Absolutely. Watch their overall financial health, revenue growth, net income, EPS, debt levels, all crucial in future reports.
Okay, so to sort of bring it all together, Surf Air Mobility is this really interesting mix, isn't it?
It is. A foot in the present as a big commuter airline.
And a foot firmly planted in the future with these ambitious tech plans.
The sources show innovation, market presence, but also, the financial realities, the risks involved.
That lowered 2025 revenue forecast really stands out, though.
It's a key piece, yeah. Makes you question the pace of adoption, market conditions they're facing right now.
So for you, our listener, this analysis hopefully shows a company at a really potentially pivotal point.
Their commitment to sustainable aviation, to AI, it's compelling stuff.
But the financial metrics, the market volatility, they warrant careful observation.
Future reports, tech progress, those will be the key indicators of where they're headed.
What really emerges is that tension, right, between the vision and the practical challenges of executing it.
In a tough, competitive industry, it's a story that's definitely still unfolding.
It is indeed. So that brings us towards the end for today.
Hope this overview was helpful.
If you found this analysis useful, maybe gain some perspective.
We'd appreciate it if you'd consider subscribing.
Or give this a like, maybe leave us a comment below.
Seriously, we'd love to hear your thoughts. What other questions did this raise for you?
Are there other aspects you'd like us to explore in the future? Let us know.